GoPro will report results this evening, and to prepare, we're going to decompose management's outlook and compare it to the consensus estimates heading into the release. To do this, we'll be using our earnings model. If you're new to our modeling approach, please visit our website, gutenbergresearch.com. Click on the Education tab and scroll down to the GoPro model page where you'll find a full demonstration video. Essentially, the way it's set up is in the upper left-hand corner, we have our valuation summary. The income statement is modeled on both a GAAP and non-GAAP basis. The dark gray columns represent historic actual periods, and the light gray represent forecasted future periods. Anywhere you see orange cells, those represent consensus estimates. Purple cells represent management guidance, and blue cells represent our assumptions that you can change if you download this model. Below the income statement is the segment details and some ratio analysis, as well as a non-GAAP adjustment breakdown. And for GoPro, we also have an adjusted EBITDA reconciliation, followed by the balance sheet, cash flow statement, and summaries of our valuation approaches, the multiple valuation approach and discounted cash flow valuation approach. Okay, so scrolling back up to the income statement, we can take a look at the guidance that we got from management on last quarter's earnings call, where they said that they expect revenue to be between $430 million and $445 million. They also said they expect a favorable product mix this quarter, with high-priced cameras making up more than 50% of the total units sold, and this would result in a gross margin of about 46%, plus or minus 50 basis points. They anticipate operating expenses will come in at $140 to $145 million, with an average tax rate of 24%, and diluted share count of 149 million shares. This would result in EPS range of 29 cents to 32 cents per share. So management's guidance left out a couple of key items on the income statement. One, other income or other expenses in this case. Two, non-GAAP amortization expense here. And three, non-GAAP stock-based compensation expense. So the other income and amortization of intangibles, both of those two items remain relatively consistent from period over period. So in our model, we modeled them both at $1 million for the third quarter. But stock-based compensation tends to fluctuate quite a bit. So we took a look at management's guidance, and we said that at the low end of their guidance at 29 cents per share, stock-based compensation expense would be approximately $5 million for the third quarter, which is well below the $19.6 million that we saw in the first quarter of this year and the $11.2 million that we saw in the second quarter. Now, if we turn to the consensus estimates heading into Wednesday's release, revenue is expected to be $434 million, which represents the low end of management's guidance. If we take the conservative view and assume that gross margin is 45.5%, the low end of management's guidance, and operating expenses come in at the high end of management's guidance at $145 million, with the growth driven by R&D. And then we can assume that the taxes and the share count are in line with guidance. Like I said, other income and amortization of intangibles, we're modeling them at about $1 million each for the quarter. Then the current consensus EPS estimate of 29 cents implies that stock-based compensation expense would be just $5.6 million, which is even lower than what was implied by management's guidance. Overall, the relatively low expectations, other than for stock-based comp, could be setting investors up for an upside surprise, but keep in mind that GoPro is still a young company with sales growth rates that are extremely difficult to predict. If you'd like to download our full GoPro model, it's available for free on our website, gutenbergresearch.com. You click on the Free Models tab, and after you register, you'll have access to all of our models by just going to this page and then clicking these buttons to download each of them. Here's the GoPro right here. And then once you do that, you can plug in your own assumptions. So for example, you can see our model right now is predicting an average share price using the two approaches of $31 per share, and again, we're calibrated to meet consensus EPS estimates of 29 cents. But let's say you want to maybe change the gross margin or even change the growth rate in the number of units shipped. So let's say you expect, or you want to see what happens if the growth rate was equal to what we had in the second quarter. You can do that, and instantly you can see that the EPS goes from 29 cents to 34 cents per share, and the expected share price goes from 31 to 35.73. So you can run a number of different scenarios there. So that's it. Be sure to check back after the earnings call when we update the model. Thanks for watching, and good luck with the release.